Hello everyone. Today we'll discuss about completing the audit. The auditor should consider whether the information presented and the accounting policies adopted are in accordance with the Companies Act 1965 and accounting standards. On top of that, under Companies Act 1965, it requires a registered company to table its annual financial statements at the AGM at least once in every calendar year. The auditor should apply analytical procedures to perform an overall conclusion. These analytical procedures are intended to reconfirm with the conclusion. For example, when analytical procedure on account receivable is performed, and if the result also concludes that the amount is fairly stated, looks like the conclusion needs to be reconfirmed and it can be a basis for auditor's opinion. Next, going concern. Going concern assumption is an important assumption underlying the preparation of financial statements. Under going concern assumption, an entity is assumed to be able to continue as a going concern for a foreseeable future period of time. Auditor's responsibility is to consider the appropriateness of the management's use of the going concern assumption in the preparation of financial statements. Be alert whenever there are any material uncertainties about the entity's ability to continue as a going concern that should be disclosed in the financial statement. The following are indications that auditor need to be alert for the going problems: operating indications, shortage of important supplies, financial indications, adverse key financial ratios, other indicators, pending legal proceedings against the entity. Steps to be taken by auditors. Evaluate whether the results of audit procedures performed during the course of the audit provided any indication of events or conditions which may cause substantial doubt. If there is substantial doubt, the auditor should obtain information. If the auditor concludes after evaluating management's plans that there is substantial doubt about the ability of the entity to continue as a going concern, the auditor consider the adequacy of the disclosures with respect to such uncertainty. Next, mitigating factors. Factors or situation where auditor can satisfy with, for example, for the indications liabilities exceed assets, for the indication loss of principal. When a question about going concern arises, some of the normal audit procedures should be taken are: analyze and discuss cash flow, profit forecasts with management. Review events after the period end for items affecting the entity's ability to continue as a going concern. For example, the company have increased share capital of the company. Going concern assumption considered by auditor is: next, subsequent event review. Management of the entity has the responsibility for establishing policies and procedures to identify and account for subsequent events. Auditors should review the management's procedures to identify subsequent events and perform specific audit procedures designed to identify subsequent events. Subsequent events time dimension. Period 1. Auditors have a responsibility to perform procedure to discover and evaluate all subsequent events that may have a material effect on the financial statements. Period 2. Auditors does not have any responsibility to perform audit procedures. Management are responsible to inform auditors of facts may affect the financial statement. Period 3. Auditors have no responsibility to perform audit procedures. Opening balance and comparative figures refers to those account balances. The auditor should obtain sufficient evidence to ensure the opening balance do not contain misstatements that materially affect the current period's financial statements. Ensure it is correctly brought forward from previous period. Next, audit of accounting estimates. Auditors should obtain audit evidence regarding accounting estimates. It is a management's responsibility, sometimes simple and sometimes complex. Next, audit procedures. Review last year's working paper to identify related parties and their transactions. Review minutes, review corporate structure and discuss with management.